Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and markets are picking up. It's more than 17,900. So going into the US CPI inflation print, which comes out at 7 p.m. later in the evening, very strong. Let's run you through all the top headlines that we're tracking at 1:30 p.m. Midcap slip even as the key indices gain on hopes of milder consumer inflation print in the US. IT, FMCG gains, while realty, utilities drag.
Newland Labs fires up after posting steady growth with an improvement in margin. Higher margin products boost the operational performance.
JBM Auto surges after delivering a strong Q3. The management tells CNBC-TV18 they hope to close the financial year with a top line of 4,000 crore rupees.
Weak results weigh down Godavari Ispat Power and Ispat. Management expects a 20% bump up in pellet prices on a sequential basis and is positive of resuming exports next quarter.
Nykaa slips following a dip in profitability. Nuvama cuts the target on the stock, lowers the EBITDA outlook. They point to an increase in capital consumption. Well, it's the afternoon belongs to auto names. Bharat Forge reported numbers a while back, and now Eicher Motors numbers are flashing for you on your screen. At the bottom line, 740 crore is bang in line with what the street was anticipating. So this would be a strong 60% growth in the company's bottom line. EBITDA margins at 23% is an expansion on a year-on-year basis because the comparable quarter of last year, margins were at 20.2%, but it's slightly about 80 basis points lower than what the CNBC-TV18 poll had thrown up. As you can see, net profit up 62.5%, margins expanding on a year-on-year basis to 23%, but a bit lower than consensus expectations. Sonia is here with the details. Sonia, you were expecting a very strong showing from Eicher Motors, considering how robust the Royal Enfield sales were, and the company's delivered.
Oh, absolutely. But, there are no positive surprises here. The numbers were expected to be strong and they are absolutely in line with expectations. Now, the thing is, in this quarter, the Royal Enfield business has done very well. That's because of the new Hunter 350 series, 350cc bike which was launched. It was received very well by the street, and that led to a really strong volume growth of 31% year on year. And that's the reason why you've seen the numbers as well be very strong this time. The revenues have come in at 3,721 crores. That is a growth of almost 30% on the top line. Now, on the margin front, I think this will come as a surprise to most. The fact that the margins, have come in at that level of around 24%. Now, the reason is that same time last year, the margins were about 20.2%. This time it's come in at 23%, I beg your pardon. So that's a 300 basis points rise on a year-on-year basis for the margins for Eicher Motors. Now, this is a good thing because remember, the blended margins have been under a bit of pressure with the new Hunter 350cc. That's because the Hunter is a low margin product, and hence the fear was that although volumes will rise, margins may not rise proportionately. In that context, the margins are slightly lower than what the street was estimating. So perhaps that's the reason there's a little bit of a disappointment in the stock. Going forward as well, as the volumes of the Hunter 350cc rise, the margins, could get compromised because it's a low margin product, and hence that's the reaction that you're seeing on the stock. But that's just a smaller worry. I believe that, Eicher Motors is on a path to recovery, at least in terms of the numbers that the company has reported so far. Even the Volvo Eicher business has done pretty well. Volumes have grown quite a bit because of the recovery of the commercial vehicle cycle, and margins have picked up on the back of lower raw material costs as well as higher operating leverage. So yes, these numbers are looking very strong. The only niggling worry, as I said, is that blended margins are slightly below what the street was estimating because of the higher volume of the low margin Hunter 350cc which the company has sold.
Take that point, Sonia, and it's a very busy afternoon for you. It's not only Eicher Motors, Bharat Forge also reported numbers. Can you tell us what did those numbers look like?
So Bharat Forge was a really strong operational performance. In fact, this time around, the revenues and the margins beat street estimates. The revenue growth was 22%, coming in at 1,952 odd crores. The EBITDA went up 31.2%, and the profits were under a bit of pressure. But what I really liked about Bharat Forge's performance this time is the margin picture. So if you map the last 6 quarters for Bharat Forge, the margins have been anywhere between 24 to about 25.7%. This time the margins are at 27.4%. So there's a good recovery that we've seen. The problem with Bharat Forge really is that a couple of their global subsidiaries have been under pressure. In Q2, the global subsidiaries had actually reported an EBITDA loss and a net loss as well. So it would be interesting to see what happens with those global subsidiaries this time around. Also, the other thing is rising debt for Bharat Forge, which is another thing we're awaiting in the management commentary. So far, the initial prima facie numbers that Bharat Forge has reported are looking good. We haven't got the commentary or the guidance from the management just yet, but two key problems, as I mentioned, rising debt for Bharat Forge and the global subsidiaries have been reporting losses. So I'm awaiting more details on that. Other than that, I mean, the stock is reacting. It's down 2.5%. So perhaps some cautious commentary coming through from the management. We'll keep you posted on that.
Sonia, thank you very much for that. The street was anticipating softer profitability for the European business of Bharat Forge given the high energy prices. There is a conference call scheduled at 3 p.m. today, and that's going to be watched very closely. The stock, though, is slipping, and a very sharp reaction. The initial reaction to Bharat Forge's numbers were positive. The stock spiked looking at prima facie. It looked like a beat, but thereafter there has been a pretty steep sell-off that we can see in Bharat Forge. Awaiting greater clarity on these numbers, but as I said, conference call at 3 p.m. will be tracked. Get into a break. On the other side, we'll connect with Rajesh Agarwal, the Managing Director at Insecticides India.
Welcome back. Well, let's quickly take a look at Bharat Forge again, because there is some management commentary coming in there where they expect growth momentum to continue in Q4 as well. The EBITDA figure has a forex gain of 41.5 crore rupees versus 4.5 crore rupees in the year gone by. Additionally, Sonia was talking to us about the debt number, which continues to be a worry as well. So according to the presentation in the consolidated highlights, the long-term debt has increased to 2,489 crore rupees, which compares with 2,315 crore rupees. So debt to equity, that ratio has risen to more than 1. It's 1.02 times versus 0.85 times. The international business as well, if we look at some of the numbers that the company has given in annexures, so there as well, their EBITDA ex of US aluminum, ex of US business has actually seen a loss which has become bigger. So that particular thing is something that should be on your radar as well. However, the management does say that they expect growth momentum to continue across both the international and the domestic markets as well. And the overseas operations posted an EBITDA loss of 62 crore rupees. However, they continue their journey towards profitability. So those are some comments coming in. The debt has gone higher and the international business continues to see losses. Those were two things that Sonia mentioned to us as well, and that continues to be a worry. So stock is lower at the low point of the day as we speak. With that, let's move on and continue to take forward our result analysis as well, and start with Insecticides India. The agrochemicals player delivered a good operational performance in the third quarter, with margin growing by 60 basis points on a year-on-year basis. The management had told us earlier that they hope to achieve 25% growth on the back of capex, and also expects exports to contribute more to its revenues. What was the analysis this quarter? Let's get in the management, and we have Rajesh Agarwal, the Managing Director of the company, joining us now. Mr. Agarwal, good afternoon. Thank you so much for joining us. Can you tell us in Q3, what was the contribution that came in from exports? Because you expected good contribution this year. Export revenue was expected at 150 crore rupees in FY23. Aren't you on target to achieve that?
The company performance is going good actually. We at Chopanki, we have completed the expansion, and it has started showing the result, and we are recently going to launch a few new products out of our technical plants. There will be 2 new AIs which will be launched from the Rajasthan plant, and we'll be launching at least 3 products during this quarter. But this is not a major quarter for sales. So the numbers will be visible, and you will find the growth in Q4 also for the company, and it will be a double-digit growth, I can say, both on the top line as well as the bottom line. but the real growth will be visible in the next year only. So in the Gujarat also will be completing this project by the end of this year, which means by March we should be able to complete our expansion in Gujarat also. And from Q1 itself, the full result will be visible.
Mr. Agarwal, when you say Q4 revenues will be in double digit, are we looking at a 10 to 15% type of growth, 15 to 20% or even more? And what could you end the year with, FY23, in terms of a top line?
Like there should be around 15% plus minus growth in this quarter, which will end up with about 20% plus type of growth in totality for the company.
Okay, 20% growth in FY23. So you had guided for 25% earlier. So it will be plus minus that. What about exports? I had asked you that question earlier because you did say that this is one segment will start contributing more. 150 crore rupees this year, is that possible?
It looks little difficult actually, because this year we have find a lot of exchange pressure because the insurance company has re-rated many countries, and the countries are finding it very difficult to give us the dollars. Many of the customers along the in Africa, in Middle East, also in LATAM are facing this problem of currency. So we are not able to execute the order despite of having the orders in hand. So little slow. So this year,
what will the export number? Yes, what will the export number be?
It can be in the range of 110 to 115 crores.
110 to 150. Okay.
Okay. You are very optimistic about things improving in Q1 of FY24. You've got 3 new products which you're launching in the current quarter. What could the numbers then look like on the domestic side and even on the export side? And what would be the big triggers for you? The key things to watch?
The key things will be the launch of that both our B2B and B2C sales are going to take a rise. In the export front, though, it will start moving slowly. So I cannot declare like what the export is going to look like in Q1, but definitely it will also have the jump. So I can say all the 3 businesses of the company, B2B, B2C, and the export business will grow next year. A target of 25% growth.
Okay, 25% there. I just wanted to do a follow-up on your Gujarat plant. Is it the Dahej plant that you're talking about? And it was expected to be commissioned in Q3. So you're saying that has been delayed and it will happen by the end of this year?
Yes.
Okay, so what led to the
start by March actually. And
so it was
Rajasthan, yeah, yes.
Okay,
please.
so it was the Dahej plant was supposed to be commissioned in Q3. Now it will get commissioned in Q4.
Yes.
Okay. So what will FY24 growth look like in that case? Because you must have penciled in some revenues or some margins coming in from this particular project as well, right?
Yeah, definitely. Basically, we are targeting a 25% growth for the next year again. So 24%, FY24 will again target 25% growth.
On exports, what is the visibility on this exchange-related issue, getting resolved? Or is it some sort of a slowdown which could keep exports subdued for you?
Yes, for this year, we were forced to be subdued. But for next year, we are trying to form various strategies, wherein we are also looking to make one branch at Dubai. So that will also help us. And definitely, we are trying to find out the ways how we can come out of this problem, actually. So the team is working and they are quite confident that next year we should be able to surpass the numbers, actually, of exports. Whatever we could not do this year, we will be able to double our exports in the next year.
All right, Mr. Agrawal, thank you so much for joining us and giving us all those details. So that's the word coming in from Insecticides India. The numbers were good in Q3. However, the stock is lower for 2 reasons. One, that the Dahej plant commissioning has been delayed to Q4, and exports, the target of 150 crore rupees, maybe the company will not be able to meet that in FY23. Slip into a short break. Up next, we'll connect with Anand Agrawal, who's the CFO at VMart, to discuss their Q3 numbers. So stay tuned for that.
Welcome back. Let's get another corporate conversation going. We've got the management of VMart with us, Anand Agarwal, the CFO of the company. The company has reported a muted Q3. the top line growth was only 12.3%. This compares with a 55% revenue growth in the first 9 months. So in Q3, things slowed down. Margins too saw a drastic drop. From 19.6%, margins came down to 13.4%. So that's a more than 600 basis points year-on-year decline in the company's EBITDA margins, and that drove a 65% drop in the company's profitability. The question now is, have things improved as we kickstart a new calendar year? Anand is with us on the show now. Anand, that's the question, right? How has January and the first half of February been? And if you could share some numbers in terms of same-store sales growth, the footfalls, the conversion, what would the comparable numbers look like for the first half of Q4?
Hi, good afternoon. I think definitely the performance is getting better. We are seeing better like-to-like growth. Obviously, the last year, January, we had the Omicron scare, and therefore the numbers may not be strictly comparable. But definitely coming at the backdrop of Q3, we are definitely seeing better traction and better footfalls. And also to comment on the Q3, in fact, while the numbers may look slightly down, but that's more because of one-time expenditure that we did around a recent acquisition. But otherwise, for the core business, I think the business remains fairly strong and robust, and we continue to make more inroads into developing more new stores so that we can keep pace on the future growth as well.
Okay, so that is about demand situation. Can you tell us what's happening with margins? Because EBITDA margins have dipped to around 13% versus 20% levels earlier. Going forward, FY24, the last quarter of this financial year, how much can margins improve?
So margins, as I said, for the core business remain the same. They're not particularly way off. I think what we have done in the last quarter is that we have incurred certain one-time expenditure around certain acquisition that we did, particularly around limeroad.com, and that is impacting the margins for the quarter. On a go-forward basis, definitely there is some pressure on the margins because we will keep maintaining some pressure, having some pressure as far as the lower income customer spend is concerned. We are still seeing some pressure because of inflation, because of which we had to reduce our pricing a little bit, and thereby the pressure on the margins might still be maintained. But on a go-forward basis, I think for the next financial year, we are quite hopeful that we should see normalcy coming back soon.
What's the extent of price reduction due to lower income consumer spend?
Yes, because we basically...
No, what's the extent?
So that would be roughly around 5 to 6% that we would have tweaked the pricing and the product mix to cater to the more footfalls from the lower price segment.
Sorry, and this 5 to 6% price reduction or tweaking that you've done caters to what percentage of your portfolio, or it's across?
It's across.
It's across. And is there any visibility of increasing prices or further reducing it from these levels?
I would not say, Rima, that we would have reduced prices. What we have done is that we have introduced more products at the lower price points so that the availability for the lower price point seeking customer becomes more.
Okay.
Thereby, the mix of the product that we sell is slightly more at the lower price points, decreasing the average selling price for the company in general.
Okay, so the product mix is now more towards the lower price product, and therefore the blended average selling price of VMart has come down by 5 to 6%. Do we see more integration related expenses for you in the subsequent quarters? Because I know in Q3 there was a charge of about 35-36 crore. Would there be a similar number in Q4?
Not really, because this was a large part of this was one time. Around 12 crores out of this was one time, so that would not get repeated.
And the balance 24 crore, because in Q3 the expense was 36, 12 crore of that is one time. So what about the balance 24 crore of integration costs?
Yeah, so that's not really integration cost. That's the Opex, normal Opex cost, which we have got, added on because of the new business that we have diversified into. Which is the online e-commerce marketplace business, and that's still in an investment phase, and we will invest roughly around 20 to 25 crores as far as loss funding is concerned towards this business in the next quarter as well.
Okay, thank you very much, Anand. Great chatting with you always. We get a lot of insights about what's happening at the lower end of the economy. So thank you very much for joining in and wish you all the very best. By the way, Adani Enterprises numbers are flashing for you on your screen. That was the other big number that we were tracking today, and there has been a big jump in the numbers. We only have the basic numbers. Revenue growth of 41.9%, EBITDA margins at 6.1, which compares with 4.1%. So 200 basis points improvement in the company's EBITDA margin, and the net profit this time is at 740 crore. Look at the stock price reaction. The stock price was actually in the green, it was in the red, and now it's spiked up. It's managed to recover 8% from the day's low and is now back in the green territory. Adani Enterprises has recovered all its losses and is now up close to about 1.5%. The numbers will get flashed for you on your screen. Adani Enterprises has reported their Q3 numbers and the street seems to like it. Get into a break on that note. We wrap up on Midcap Radar. On the other side, Mutual Fund Corner when we return.
Co-powered by IBM. IBM,